Hi, and welcome to the Personal Side of Business, where every business has a story. I'm Jet Bunwong, and today my guest is Cristen Carver. She's a powerhouse mortgage expert who's built her career on trust, transparency, and getting deals done when others say it's impossible. Welcome to the podcast, Cristen.
Thank you. I'm so excited to be here.
Yeah, I'm excited to have you. So tell us, how did we get here?
How did I get here? So when I went to college, it was the mid 80s and computers were that was the thing. You know, everything was going on computers. And so I got a degree in computer programming. I'm really good at math. It's my thing. So I was like, this is a perfect fit for me. And then as I got into jobs after I got out of college, I transitioned to a mortgage company that was going to put everything on the computer system. So they needed help setting up all of that. And then when I got the job, I'm a curious person, so I started working in all the different departments. I went over and worked in the processing department. I worked in the loan document department. I was ordering appraisals. I was doing everything. And eventually, like 5 years later, I was still at the mortgage industry and I was doing all this stuff. I went and got my real estate license and I went into sales and had my first job in sales in 91. Never looked back.
Wow. So you've been in this for a long time.
86, yeah.
Wow.
Almost 40 years.
How has the industry changed? What major changes has the industry had since you've gotten into it?
I would say the biggest change we had was credit. When I first got in the industry, you evaluated someone's credit. Were they an A-plus borrower or a B, C, D based on their credit history? That was way before FICOs. We didn't have the Experian, TransUnion, FICO scoring. So we determined people's interest rates based on that, and not on their credit score. And so that was a huge change in our industry. When I got in the 80s, the interest rates were in like the 14, 15%. So interest rates have come way, way, way down over the years.
Yeah. Has it helped you become better at your job with all the changes, or has it made it harder for you to do your job?
Both. It's harder because I feel like it's a little discriminatory. You can have someone with perfect credit that has a low score because maybe they have excessive debt. That doesn't mean they're not paying their bills on time and they don't qualify. So it can be negative as well as positive, you know?
Yeah. During the time that since you started until now, how has the industry affected you in terms of pay and do you think it is where it needs to be in terms of pay, especially for a woman in the industry for so long?
So I would say it was a little Wild West when I first got in. There weren't a lot of rules. You could charge whatever you wanted, and people took advantage of the public for sure. Yeah. So that changed a lot with TRID in the 2000s. Everything changed, and they started regulating how we get paid. So now I can't charge a client whatever I want. I get paid based on the amount of business I do, not the client, their credit, the interest rate, nothing. So that's huge. And now I would say across the board, it's the same. So we're all getting paid the same, whether you're a man or a woman. Probably men were making more back in the beginning, but now it's the same.
When that was starting to change, all the different regulations that were happening, what were you thinking at the time? Were you thinking this is going to actually even out, benefit everyone, the client, and also the people in sales and mortgage industry, or were you starting to see that it was unfair?
No, it was definitely beneficial. We were coming out of 2009, 10, 11, where the market just tanked. We had a lot of crazy loan programs prior to that. People were losing their homes. I believe 70% of the people in the United States lost their homes. So the regulations were to protect the consumer, and it protected everyone. I think it was overdue.
Really?
Yeah, for sure.
And now I'm starting to see, I saw a stat the other day that there's an uptick now in foreclosures, right? What do you see as someone that's been in the industry for so long to prevent that from happening now for customers buying their first home or maybe buying their second home? Like what are some preventions that you can do right now to stop from foreclosure in the next couple of years?
I think people tend to buy homes more expensive than what they can afford. They are excited about the home, and realtors don't help. They take them to these expensive, gorgeous homes that are at the top of their price point, and they don't think about their budget and really being smart about their money. They just jump in. And that, I think, causes the foreclosures a lot of the time.
Because the realtor at that point is trying to make as much money as they can, right?
Yeah.
So it's kind of, we're going to different directions where I think when they get to you, you're like, okay, I want you to be able to pay this loan off. So we have a little bit of a difference of opinion on how we should treat this client.
Yeah.
Do you think that there's going to be changes in the economy in the next couple of years in your eyes? You've been in the industry for so long, that are going to start to work in favor of the buyer now that are coming up? Is there anything that you think this has happened before, this is going to work itself out again? Because right now I think it's kind of crazy in this market, right?
Yeah, the market is cyclical. About every 10 years, there's a huge adjustment. Since I've been in the industry, saw it in the mid 90s, saw it, like 2009, and we are way overdue for that. We watch everything build, and I don't want to say it crashes, but it adjusts. Mm-hmm. So the home prices are insane, like way too high. And I believe interest rates are good. I know a lot of people don't. Right. They want the 2s and 3s, and that's not normal.
Do you think we're ever going to get back to 2s and 3s outside of having another pandemic or something crazy?
Or a war, pandemic or a war.
Yeah.
Really, that's it.
Yeah.
Historically, interest rates sat in the 6s, and that's where we're at.
Yeah.
So we're right in the sweet spot. However, those people were buying homes for $300,000 that are now like $1 million,
Yeah.
So that's the problem, is that home prices are high. So if we get to a point where the interest rates come down low enough that there has never been a time in history where there's more equity in real estate in the United States. Right now, it's historical. So people are sitting on all this equity. They're like, gosh, I want to sell my home and get a bigger home, or my family needs a bigger home, whatever. They need to move, and they can't. They feel because of the interest rate.
Yeah.
So if the rates could get down into the 5s, we're predicting a lot of homes going on the market, a lot of that equity being freed up, and that should be good. It should be good because it'll get the prices down. There'll be more competition, and it'll be easier for people to qualify. So.
Now let's dive into that qualification a little bit.
Okay.
So let's focus on this Southern California market right now, because I always like to do that just because I think it's this. It's intense here, California in general, but Southern California. If you are a first-time home buyer, are there programs? How do you walk them through and say, you have a chance here at this $950,000 house? What's the talk?
That's funny. San Diego is the most expensive city to buy property in the United States. 950 is probably not a first-time home buyer. So we do have a lot of assistance through the city, the county, city of El Cajon, city of Chula Vista. It is definitely geared towards more of the $300,000 to $500,000 price range, which is the problem, right? There's just not a lot of homes in that price range. So the banks have stepped up, and now we're doing a lot more 100% financing, where you can go to possibly $1 million or higher. Yeah.
So how does that program work? Could you explain just a little bit about that?
So what they're doing is offering secondary financing for the down payment. You're doing an FHA or conventional first mortgage, and then they have like a private second mortgage to cover the difference to get them in.
And what does that look like for qualifications in terms of how much someone needs to make, or a family needs to make, and then also maybe a monthly mortgage? So
the easy math, and I love to talk to people about math, 45% of your gross income is your maximum mortgage payment. So if you're making $10,000 a month, you do not want a mortgage payment over $4,500. Then we look at the total debt. Your total debt cannot exceed generally 50 to 55%. When you're looking at that first-time homebuyer stuff, much stricter. We're pushing down in the 38 to 45%, so it's much lower. So first-time homebuyers that we're getting pre-approved, we're getting them pre-approved for like a $3,500 mortgage payment. Wow. And that doesn't equal a lot in San Diego, because if it's a condominium and you have an HOA, you're maybe $450, $425, depends on the HOA fee. So it's tough. It's tough.
So what is that next conversation when someone is like, I saw this house that's like $875,000 and we both make $7,500 together.
Yeah. Do you have a cosigner? And see, that's where it's tough because we do allow cosigners, and then you're getting them into a house payment they cannot afford, which is going to cause a foreclosure. So if you're making $7,000 a month, we really are pushing you to a $3,300 to $3,500 payment. And, that's putting you at a $400,000 condo.
Are you talking them off that ledge? And then
It's a reality. This is what it is.
Yeah.
People really don't understand how much a payment is at this purchase price, even though they're on Zillow and they're playing with the calculator. So it's a huge reality check for sure. And when we go way back to the cause of the nightmare of 2009, 10, 11, we were doing those NAGAM arms at 1% interest rate. And I would have people call me and say, oh, I just saw a house for $500 and my realtor says you can get me a $1,500 payment. And that caused a lot of problems. So that $500,000 house payment or $500,000 sales price should have been like a $3,500 house payment, not a $1,500 house payment.
Yeah.
So I believe we have everything in place now to keep people from making those mistakes.
So is it sounds like even with that assistance program, it would be really difficult to try to get in San Diego. So do you have that conversation with them to start to look elsewhere, or do you leave it to the realtor, or do you start to make them see things differently and go, wait until maybe you can make this amount of money, come back to me, and maybe we can requalify you for something higher?
Yeah, kind of everything you just said. We're going to look at, this is where you're at right now. Maybe you want to buy in a mobile home park. That's an option. Right. But then you have a space rent, so it's not always the best option. Right. Maybe you have a cosigner, or sometimes they're living with their boyfriend or girlfriend. So maybe when you guys are going to buy together, you're going to get married or not married, and we can join the income and then have those conversations. If this is what you want, this is where you need to be. So yeah.
Are you a straightforward shooter?
Yes. I'm super black and white.
There's
no gray area. Because you know what? There can't be gray area. When you talk to a lender and they're like, oh, and they're like all salesy, and they're just setting somebody up for something bad happening later. So let's be honest, and this is where it's at, and go from there.
But the great thing about you is you can actually do lending in multiple states.
Yes, I can do lending in multiple states, and I can do like every kind of loan. So we do more than just the first-time home buyer, or we do the FHA and the VA stuff, but we do all the alternate stuff as well. So I think at one time you had asked me, what do people think? Like, how do people think they can get qualified? What is it like? And a lot of people think, I got to have this huge down payment. I have to have perfect credit. I have to have this and that. And that's not true. We have so many programs where people can get in, like we just talked about, no down. We have programs for people that have less than perfect credit, and we have programs for people that have income issues because they're self-employed. So we're doing the qualifying off the bank statements. We're qualifying people off their letter from a CPA, all kinds of stuff. There's a lot of alternate product out there, and we're doing it across the whole United States.
Has the qualifications and what the banks are looking for changed because of these different type of jobs? Like you just mentioned, you talk about people work from home. Maybe they're an influencer on Instagram or something, but they happen to make $20,000 a month. When that started happening, what was your thought? You're like, the industry is really changing now and understanding this, right?
I feel like it was COVID. COVID put people at home. Before everybody went to work, and now everybody works from home. And the great benefit with that is you can live anywhere you want. You don't have to live within a mile or 10 miles from your job. Your job can be in Texas, and you can live in, Alaska, whatever. You can live wherever you want. So that is more the changing that we saw. As far as qualifying, it's the same. We're still qualifying off of your tax return income. It's the same it's been for 40 years. So if you can't qualify off your tax returns, then you're qualifying off the bank statements. Now, that's more the alternate stuff that has come out, I would say, in the last 5 years.
Because if someone had a job change recently in March of 2025, but their bank or their taxes didn't qualify for the previous year, then now they can qualify off of those bank statements. You're saying
12 months bank statements.
Yeah. Wow.
Yeah.
Okay.
So we have seen a lot of changes, and that's normal in our industry. As things change, we get new programs, and they're always trying to figure out a way to make it work.
How do you stay on top of that? Are there courses, educations, or is there like email marketing that they send out and go, this is what's happening with the industry, and then you try to follow up on it? Or is it up to you to be in your industry and just stay on top of it however you can?
Well, we're connected to probably 100, 200 different mortgage companies and banks. They have salespeople, and they're sending us emails on product. We're doing seminars or Zoom calls. They're coming by the office, and they're making sure that you know about that product that they have. They want the product to be successful. So, and even just we do so much networking. You're at so many different events. People are talking about the programs. It's out there. All of the Pacific Southwest Association of Realtors, San Diego Association of Realtors, all the associations are having events where lenders and realtors are getting up and talking about what's going on. It's out there. It's easy to access.
Now, for someone that does so many different states, just curious, is there a state that you feel like lending or getting into as a holistic approach is the easiest?
Say the homes that are the cheapest.
Yeah, I'm trying to say it without saying that.
It's the same. Texas has the most restrictions, which is weird.
Yeah.
However, it's pretty much the same for all the states as far as qualifying. But if you're looking to buy property, then you're going to be looking in the states that have the least expensive properties. We always talk about Ohio and well, Detroit. That was a big one. I've recently been doing a lot of stuff in Alaska, and a lot of Alaska is on leased land. So that gets a little tricky too, doing leased land property.
What are some of the rules of that? So you could purchase a house, it's on leased land. What happens? Is there a certain limit that you can be on that land for, or is it whoever owns the land lets you, like if they like tomorrow you got to get out, then you have to figure out what's going on in the home? Is that
no? They sign leases. There's usually like a 50-year lease, or it depends.
Yeah,
you know where you're looking, and we want the lease to be as long as our loan. So if you're doing a 30-year fix, we would like you to have a 30-year lease, that you're not going to get booted off before the mortgage is paid off.
Is that a scary position for? I would think I would be terrified if, even though I sign a lease, if something does happen, for me to have to deal with my home as one entity and then the land situation as another entity. It's almost like for I guess mobile homes, right? Like same type of thing. Is there a product that you like that's easiest for a home buyer to get into over time? Like do you see something that you're like, this is usually what my go-to type of product?
The easiest financing is government. Whether you're a veteran, VA is they do not turn down their people.
Wow.
It is, you can just really push the envelope on credit, mortgage payment, everything. And even if you're just kind of outside guidelines, you send that loan to VA, they approve it.
Wow.
They take care of their people. It's awesome. Or FHA, the federal stuff. That's the easiest for everybody else to qualify for. Highest ratios, lowest credit scores. And then the conventional stuff sits in the middle.
Are there... is there a limit into relation of who you are into with the VA loan, regards to VA loan? So if you're, I'm assuming if you're an offspring, you can qualify?
No, you have to be a veteran.
Oh, wow. Yeah. Okay. I thought it was like the insurance, how like, they're like, there's like my great grandkid is this, and they qualify for insurance.
That's funny. A lot of people ask me that. They're like, my dad has VA. Can I use it?
Yeah.
No.
So they have to have served or currently serving.
The veteran has to be on the loan with a spouse.
Okay.
You can have multiple veterans, like you could have two brothers that are both in the military. You can have a cosigner that's not a veteran, but you have to put a down payment down. Well, normally VA does not require a down payment. So there is a little way to get around that if you have money. However, to get a VA loan, you have to have a veteran on the loan.
And is that VA loan all across the United States? Wow.
Yeah. Yep.
That's interesting. And why is that loan not used as much? I don't hear about it as much.
Really?
Yeah, I think from from I guess a buyer side, I don't feel like people talk about it enough. And I don't know. I don't know if I'm not hanging out with enough vets.
You're not hanging out with Navy SEAls.
Yeah. I need to hang out more Navy SEAls.
Me too.
Yeah. So now I'm curious about, you've had such a great career in this industry. What do you think have been some of the top 3 things that you felt like you've done that has made you successful?
I wasn't prepared for that question. Network. I think the more people you know in the industry, the better, especially if, the industry changes and you need to pivot, go to a different company, a different platform, knowing people. So networking, education. I'm licensed in multiple states. I think that's helped me be a little bit, more marketable, I guess. Gosh.
Did you start networking early on in your career? Wow.
1991.
What made you realize that networking was going to be good for you? Because I don't think a lot of people realize that until a couple of years where someone suggests that you should go to more networking. Do you figure out right away that you should be doing that?
It's funny because we didn't really call it networking. It's just sales, right? It's sales. You got to do your job. And so in 91, when I got my real estate license and I went into sales, you're walking into offices, talking to people, and then you realize, if I join an association and I go to mixers, there's, 200 real estate agents here instead of 5. So it's just a no-brainer. You're trying to touch as many people as you can. Let's go to Caravan and look at houses with real estate agents. Let's go do whatever events we can do with real estate agents to meet people and, network.
Yeah. Were you one of the leaders in your industry for networking?
No.
Did you get out there and you're like, I'm one of the first ones, pioneers?
No, I did do a lot of sponsoring though in the beginning, and I felt that helped get noticed and have more connections. So if there's an event, I'm going to be sponsoring the coffee or whatever and standing there. So all the real estate agents are going to come up and get coffee, and I have more opportunities to talk to people. So that definitely, sponsoring was huge. I did meant so much sponsoring in the last 20 years.
Wow.
Mm-hmm.
What are some of your networking techniques? So the reason I ask is I have this thing where I like to try to find 2 personal things about that person and share one. That's always, and I feel like that conversation goes for a couple minutes because you're trying to figure that out, like these certain values. And it's not like your name, it's not like your favorite color or something. It's more like something that I felt like they didn't think they were going to share with a stranger, and then they start talking. Oh, I love this sport, love cricket, and you're like, oh, why would you share that with me? But I think that's the information. Is there anything like that you do as you're networking over time? And you're like, these are sort of my tried and true techniques to get people to connect with me?
So when I network, I do strategically pick people that I want to meet, so I'm not really just kind of roaming around talking to people. So I know who the big fish are, the whales that I want to meet, and I will go up and introduce myself to them and, compliment them, right? Like everybody likes to be recognized and just say, I saw you at this event, or you talked at this event, and I remember when you said this, and it was inspirational to me, and just ask questions, right? Just ask as many questions as you can. And then every time I go to an event and I see that person, I walk up to him and talk to him again. Just remember me, I want to know you.
That's great. That's great. Yeah, I didn't even think to to compliment. I always think I try to find someone that I don't know. So I feel like maybe I'm doing it the opposite way. I need to go find the whales.
It's easy to find the people that don't do business.
because I mean, the reason why I'm asking, because there's going to be people that are trying to get into the mortgage industry that, one, I don't think about networking right away. They're sitting there in an office or at home and thinking, okay, I have to just try to make this work. But I think, as you and I have over the years understand that how important networking is, getting to know the community and people, and not just even people you want to do business with, but those one step out people that end up referring you to good people.
Right.
But I think I want people to understand how hard it is, I think, to be in your industry and get to where you are now, because you don't just get there by just sitting around and just waiting for things to happen, right? You went out and did things, and then to also think of it outside the box, where, in my eyes, to be able to do it in multiple states, that's probably not easy, was it, to get licensed in multiple states? And
no, it's expensive, and it is a lot of education and testing, and every year.
How long was that process for you when you first decided you want to get licensed in multiple states to when you actually were licensed in multiple states?
Once you have your main license, your say California, your main license, you can apply for the other states, and it's like the education is as fast as you can do it because it's online, and then you can take the test and get licensed. So you can do it pretty fast.
Do you have to do it in each state?
Yes, every single year. And it's expensive. So real estate agents renew their license every 4 years, and it's about $250 for the license. And what their education, maybe it's $100, $200. We get licensed every single year, and every state costs money. So if you're licensed in 5 states, it's probably costing you at least $1,000 a year in licensing, at least, not including the education. Yeah. So it's super expensive. It's a lot of work. It's a lot of time.
Did you plan it to do it all like in 1 month?
No,
Okay.
no. It's funny. I was California, and then Arizona's next door, and then I have a friend who's a realtor that just moved to Nevada. So it's just kind of organically grew.
Yeah.
To where you start picking up, and then where people are moving to, as people are moving out of California, where are they going? A lot of people went to Idaho. A lot of people went to Tennessee, Florida. A lot of people now going to Atlanta, North Carolina, South Carolina. So that's where we're licensed.
So this was strategic in a sense. Like you weren't just going, I want to go visit that state.
No.
No. Yeah.
There's states that I know. I don't
Do you think the education that you have to keep up with it is really difficult in terms of from year to year, but it's just tedious that you do it?
Yeah, it's not really, and it's funny, just like real estate agents will tell you, you go through all this school and all this testing, and your job has nothing to do with it.
Yeah.
It's the same with us. We go through a lot of education, but it's not the same as actually doing business every day. But to answer the question, you were talking earlier, and somebody who's getting into the industry, I would tell them that once they have their first real estate agent that they're working with, that be the best, loan officer you can be. Answer the phone, show up at their open houses, be a great partner, whatever they need. They need flyers. They need you to sit on an open house, whatever you need to do so that they're in their office talking about you. They're in there saying, oh God, this guy is so great. He takes great care of my clients. He always answers the phone. He's educated. He knows what's going on in the market, or she, whoever. And then they're talking so that when their neighbor says, my loan officer just did a terrible job or whatever, then that agent go, well, you should try mine. And then that is the best way to build your business, is to always, like that, not door knocking or, networking is great for sure to meet people, but take care of your relationships.
It's interesting because I feel like everyone in the real estate industry says that, right? And it feels like everyone knows that, but not everyone does that.
Right.
Right. And what are there things that you do to stay on top of mind with partners that you work with?
Yeah, we do both partners and clients. So with partners, we have set up those text messaging kind of things where once a month you're, sending something out to remind them about you, ask a question, maybe a holiday, say, Merry Christmas. So you're always sending stuff out, and they respond back, oh, thanks for thinking of me, that kind of thing for sure. Yeah. Or just picking up the phone and calling people, that's the best, right?
Yeah.
And then even with clients, that they're on some kind of a drip campaign, that they're always getting something from you so that they know.
Yeah. And now, being so many decades in this industry, if you could go back and tell your younger self when you're getting in it something to do completely different, what would that be?
You mean not in my industry?
No, in your industry.
Oh, but you know what? I probably would have sold real estate, honestly. I had my real estate license, and there are there are a small percentage of great real estate agents. How do you say that?
yeah.
And so I would have sold real estate for sure, because I think I didn't value that at the time. I was all about the math and doing the loans and stuff like that, and going through so many real estate agents in 40 years. And really, I mean, I can say, like, I have 5 real estate agents I refer. I know 500 easily real estate agents in San Diego, and there's 5 that I would trust with a family member. You know what I mean?
Yeah.
So I think I would have done real estate.
Wow.
It would have been different, you know?
Yeah. And, you know, when you're going through these client situations that are become really tough for you to get them approved, what are some of the things that for you as Cristen to get through it? Like, what do you do for yourself? Do you work out? Do you go out there to have like, how do you deal with the stress? Because I have bought 2 homes. I've realized, like, everyone is in this stress bubble trying to get this through, right? Everyone wants it. Everyone wants to make the money. The person that's buying wants to get the house. The person that's selling wants to sell the house. And there's never been a situation where it was like 1 week that was just like, everything's good. Something came up, and then someone has to keep jumping in and trying to put out a fire. You probably have dealt with that so much. What is your like? Oh, you're smooth. You're smooth on it.
Smooth.
Yeah, you know what you do. But are there stressful situations you're like, this is how I get through this?
Well, communication, right? Communication, number one. And I do think if you set the expectations up front and you're having conversations with the clients and they know what to expect and they know what they're supposed to do, and they do the stuff up front that they're supposed to do, it makes it so much smoother. Now, there's nothing you can do if a home doesn't appraise, or there's some, like, the termite inspection's terrible.
Yeah.
I would say, and this is going to sound like a bragging, but in the time I've been in the industry, I think I haven't closed like 2 or 3 loans.
Wow.
That people came in that I said they're qualified and they closed. Now, does that mean like stuff comes up. Like sometimes people don't tell you everything, and then stuff happens and you're like, whoa, reset. But there's a way, I'm a problem solver. That's, I would say, my biggest strength. So let's figure it out and get it closed. Sometimes the stuff is outside of your ability to fix, like insurance. California insurance is crazy expensive. So you're going in thinking somebody's going to have a $3,000 insurance bill and it's going to be $10,000. And maybe they walk from that, but it's not because of the loan. Do you know what I mean?
Yeah.
So, yeah, I mean, there's stuff, whatever. But I do exercise. I work out.
yeah. You look great.
Thank you.
And so, starting to wrap up here, if you're trying to fix the industry, if there's something that you could fix in the industry today, what do you think that would be?
I wish loan officers were honest with clients. That's the one that's hard, because when I pull your credit now, it gets sold to mortgage companies. If you have ever applied for credit in your life ever, and they have your phone number, period. Yeah. It's not illegal anymore. So when I pull your credit, you may get 1 call, you may get 100 phone calls, and they're aggressive. Those loan officers are aggressively trying to get your business. And so they will tell you untrue things to get your business, promise you stuff that isn't, accurate or honest. So I think that part is hard. That's like a reality we've had to deal with the last few years. And then, you're trying to explain to somebody, that's not even possible.
Yeah.
We don't have 1% interest rates.
How are people deceiving other people with that information? Because it's going to have to come to light eventually, right? I used to have managers that would say, confuse people, say things that confuses them so they don't really understand. And which I'm not that way. I'm black and white. Yeah. So I was just talking to a client who's trying to get a second mortgage on his house, a line of credit. And we're talking about rates. And he's like, God, this guy's promising me 4 or 5%. I go, we don't even have it. It's not even available. Yeah. And I said, what he's probably telling you is there are credit unions and banks that have teaser rates. Like you get a really low rate for the first 6 months or 3 months or a year, and then you go to the full rate.
That's probably what he's selling you, but he's not telling you that. Yeah. He's telling you, I can get you this great rate. And he's like, yeah, it didn't make sense. And I'm like, well, it will once you get all the way in and you see the disclosures and you're like, whoa, 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 So there's nothing we can do about that.
Now, what happens if someone gets that far and they're about to sign and they start to see all those disclosures and rates? What happens to that whole ecosystem of the sale that's about to happen? Is there anything that protects the buyer, the seller, that everything stops?
No, well, when you do a refinance, there's a rescission period. So if you're doing a first mortgage refinancing or you're doing a second, you have 3 days to cancel. So when you go in to sign the paperwork, if you're not happy, you can walk. On a purchase, there's no rescission. So, and then you got your money tied up because you put the earnest money down. And if you released all your contingencies and you walk, you lose your money. So unfortunately, not really. I mean, you can walk, but most people don't. And that's,
so you're kind of pushed.
Am I scaring you?
Yeah, no, it's just, I think when you start to hear it like that I feel like that's why it's so crucial to have someone in your position be who you are. And then also if you can duplicate that in the realtor, the I don't know, any other position, the inspector, right? All these people have to try to, or you want them to be as honest as possible so they can help you out and get you where you need to go. But now you're saying it from that perspective, it's a little scary.
It's scary. Well, just think about like in 9, 10, and 11 when we had those crazy loans and nobody understood them. I mean, that was part of the whole reason why all the foreclosures and all that stuff, people really didn't understand their loans. Yeah, it was bad.
Do you think now in 2025, with all the information on online, YouTube videos, and so many people talking about the real estate industry, do you think your clients have become better educated over time? Okay,
for sure.
And I'm assuming that's also made your business a lot easier.
Yeah,
too,
yeah.
Right?
It's surprising, like when you're talking to veterans and they understand everything you say. You're like, whoa.
Yeah, this is cool. I don't have to do.
I don't have to explain this. They know what a funding fee is. They know what all this stuff is. Yeah, it's good. Great. So for sure, I think there's so much more information. Yes.
And Cristen, if people want to reach out to you, where can they find you?
Everywhere. So they can find me online. Actually, if you just Google my name, Cristen Carver, there's tons of stuff that'll come up. My website with Barrett Financial, and am I supposed to give my phone number and my email?
You can give email. I wouldn't give your phone number.
My email, ccarver@barrettfinancial.com.
All right.
But you can find me everywhere.
Yeah. All right. Well, thank you, Cristen, for being on the podcast. This is a personal side of business.
Thank you, Jeff.
Thank you.